Welcome to Top Stock Picks. This is the third day of April 2017, and I am your host, Jay Taylor, here with you to launch this new weekly podcast as an adjunct to my weekly radio show, Turning Hard Times into Good Times, and that's aired every week on the Voice America Business Channel, 3 p.m. New York time. Well, believing that we are in the early stages of a major bull market in precious metals and not finding a sufficient amount of time to expand coverage of many junior mining companies on my weekly radio show, I have chosen to begin providing additional coverage with the help of independent newsletter writers, namely and mostly those that appear at the Metals Investor Forum in Vancouver. Specifically, newsletter writers who have agreed to be a part of this podcast are those that are going to be at the Metals Investor Forum coming up on May 5th and 6th. And those letter writers are, in addition to myself, Eric Coffin, Brent Cook, Joe Masmader, Gwen Preston, John Kaiser, Brian London, and Jordan Roy Byrne. I plan to have one or two of these letter writers on my show each week. These weekly recordings will be posted at jtaylormedia.com on Tuesdays of each week, so I hope that you will make a habit of visiting that website each and every Tuesday to learn about some very interesting investment opportunities during this bull market, and also to be aware of some of the risks inherent in high-risk, high-reward sector of junior mining. So today my guest is Brent Cook, and I'm really pleased to have him with me. He, along with Joe Masmader, publish a highly regarded newsletter on mineral exploration titled Exploration Insights. Both Brent and Joe are geologists with a considerable amount of experience in analyzing exploration projects on behalf of professional investors. And you can learn more about their work by going to explorationinsights.com. That's explorationinsights.com. And I expect we'll hear from Joe at times in the future. But today, I understand he's on assignment, going somewhere to find the next major discovery of some kind. But in the meantime, we do have Brent, and thanks for joining me today, Brent.
Always a pleasure, Jay. Thanks for the invite.
Always good to have you. Always your insights, as appropriately named newsletter, are welcome to my listeners as well. As you've noted, Brent, it's becoming increasingly difficult for major gold mining companies to replace the ounces of gold that they are mining each year. Tell our listeners how many ounces of gold are being produced every year, and to what extent are the major mining companies able to replace those ounces?
That's a good topic. Right now, the global gold mining industry produces in the order of 90 million ounces a year. It's been more or less stable like that for the past 5 or 6 years, and increased a bit before that. And right now, I think last year, they found 40 million ounces.
Whoa.
So you can see right there's a 50 million ounce deficit. And that deficit has been going on now for a solid at least 6 years. And prior to that, there was a deficit as well. We had a big discovery 6 years ago. But really, over the past 10 years, we have not found enough gold to replace what we're mining. So looking out, further in the future, the major mining companies are going to be running low on reserves to keep mining.
Yeah. Well, talk to us a little bit about some of the challenges they're facing. I mean, it seems to me that mining companies are going either into, the far corners of the earth where there's very little infrastructure to try to find deposits of economics. They have to be large enough to justify those remote areas, and the infrastructure has to be built, or they're going to places that are very hostile politically, difficult, mining laws and so forth to do business. But what are some of the challenges that they're facing, and is it something that perhaps a much higher gold price would fix, or what are your thoughts?
Well, I think you can break it down in two basic categories. The first being geological or technical, in that once most of the countries opened up to exploration right after the fall of the Soviet Union, geologists were able to go out across the world and land on and walk across outcropping ore bodies. And then with the addition of the satellite imagery, you could go out and find these things, pick them up, and bring them to production. So that boosted production in the late 80s into the 90s, where we're just walking out and finding outcropping ore bodies. Well, those days are gone. Most of the larger ore bodies, I would say 90% of the ore bodies that can be found from now on, are going to be deeply buried or hidden under barren rock. What that means is that it's now much more expensive to drill out and find a deposit because you're looking blind, basically. And then once you do find something, it has to be significantly better, because rather than just starting at surface, you've got hundreds of meters of rock on top of it you've got to move.
Mm.
And that kind of leads into the second problem, is that the geotechnical and capex required to build these things has gone up considerably. And on top of that, the time it takes much more time to discover, define, and do the technical studies to prove the feasibility of these things.
Mm-hmm.
And then you've got to go through the permitting issues and social issues and that sort of thing. So even if someone makes a discovery now, they're looking at, for a larger discovery, 10 to 20 years before, from discovery to production, because you've got the environmental permits, you've got the social issues to deal with, and the feasibility studies can take hundreds of millions of dollars just to get it right. Mm-hmm. So those are the issues, and that's why it's not going to be solved with new discoveries. And then throw on top of that, over the past 3 to 4 years, exploration has fallen like 60%. As these mining companies struggle to bring down their costs, they cut first thing exploration, the second thing development, and the third capex. So they're behind the ball there as well. So the setup, and this is what we talk a lot about in Exploration Insights, the setup is such that any junior that is capable of finding a deposit or has something on the line that looks like a deposit should do really well, particularly if they find something that's legitimately economic. Mm-hmm. That deposit is going to sell for quite a premium.
Mm-hmm. Well, it has to be economic and also large enough to attract the majors, the guys that really have the technical capability, the ability to raise capital to put these things into production. It's, a lot of little smaller mines sometimes almost don't make any sense. It seems to me, the little 30,000, 40, 50,000 ounce per year operations that almost about all the best they can do is cover their costs, their SG&A and so forth. But so I believe one of the things that you and Joe look for are really the big guys, right? The guys that, so it's a very small number of companies really, I suppose, that Exploration Insights is looking at, right?
Yeah, really, if you're going to get in this sector, given how high risk it is, you want to find something large enough to make it worth the risk. Mm-hmm. There's statistics out that I think Newmont put together 10 years ago where 1 out of 1,000 prospects turns into a major discovery.
Yeah.
That's just across the board statistics. We improve those odds considerably with a bit of work.
Sure.
But that's the chances. And really, for every, call it 1 million ounce deposit grading 1 gram, let me back that up. For every 10 deposits grading 1 gram, the Earth made 1 deposit grading 2.5 grams, and that's what you're after. Mm-hmm. So you're going to find a lot more marginal to uneconomic deposits than economic ones.
Mm-hmm. And then you have that 10 to 20 year period, as you mentioned, and between that there's cycles, price cycles for gold or whatever mineral you're talking about, that for periods of time make it, what might have looked economic previously, there's no interest in it for quite a while. And we've just, of course, gone through a 5-year bear market in which mining companies weren't spending any money. But, Brent, the thing is, you're pointing out the difficulties of finding economic ore bodies, yet there are a lot of juniors out there spending a lot of money. And I know some of my friends from the Austrian School of Economics say, look, the gold mining industry is like every other industry. When the central banks create endless amounts of money, you have malinvestment. You have lots of money flowing into ill-conceived ideas. So I want to ask you, because I know you and Joe look very closely at a number of projects, what are some of the early fatal flaws that you look for? Because I know what you want to do is try to keep your subscribers out of ill-conceived investment ideas from the start, or maybe along the way somewhere you learn something that tells you that, oh, well, this isn't going to make it. Let's get our readers out now rather than before the rest of the market figures that out. So what are some of the early fatal flaws that you and Joe look for when you're looking at projects?
Yeah, I think that's a good point. In my view, what we do more in Exploration Insights is, number 1, avoid losing money, and then number 2, make money. Mm-hmm. Given the odds are so low, our goal here is to identify projects that offer this scale and then evaluate the data as it comes in. Mm-hmm. Too many projects, companies have one project that they're working on, and in reality, it doesn't offer the scale to be of interest. Even if they're successful, it really doesn't do much for the share price. So we look for scale. I think we'll talk about a couple of companies later on that I can demonstrate this with.
Yes.
Look for scale. It's got to be a geologic setting that offers the potential of a Tier 1 deposit. Number two, as soon as you start getting drill results, you evaluate that against your thesis. Is the grade there? Is the size there? Is it going to get larger? Or are we just wasting money on this thing? Too many companies, once they've raised money for an idea, they won't give up on it. So much money is wasted, in my opinion, on those sorts of things. You keep getting hit here and there, but they really don't pan out too much. Once that happens, you've really got to look at metallurgy, which means percent of metal you can recover for gold or whatever. And it's got to be, it can cost, well, for instance, a 0.6 gram open pit oxide gold deposit in Nevada makes money, in theory. But I could point to another 30 gram deposit in Nevada that doesn't make money. And it's all to do with how hard it is, or how much cost it is, how much capital cost and operating cost it's going to be to extract that gold. So that's the second thing. It's got to be recoverable at an economic price. And then you start looking at, okay, what do the issues do with the land situation, the social issues, what's the political situation in that particular country, that sort of thing. What issues are going to turn up? And then third, how is this company going to advance this project? Because you've got to keep raising money to spend on this thing,
right,
without diluting shareholders. And that's probably, I think you've talked about that a lot, is this dilution problem. Dilution problem. It's absurd.
It's a
so
killer.
How are they going to fix that problem?
Yeah, it's a killer, and that's very difficult to do. I know there's some companies that I follow that I think are very good in structuring their deals early on, and the capital structure is part of the important part of that. But you've got to spend lots of money, as you point out, before there's even any notion that it's going to be cash flow positive. So it's a very tough business, and again, that's why finding the fatal flaws early on. And I know you and Joe really look hard at finding those and getting your subscribers out as soon as possible. Well, let's talk about a couple of companies, Brent, that you think might have a good chance of being successful, might have that scale, might have that continuity in the deposit. The metallurgy might be good. The other social issues might not keep it from happening. Can you talk about a couple of projects that you and Joe think might have a chance?
Well, one strategy we use is to focus on companies whose business model recognizes the long odds of success, and so outsources the high-risk, high-dollar exploration to larger mining companies, basically the joint venture model or the prospect generator model. And one of those is Mirasol Resources. It's headed by, I think, one of the best explorationists I've ever worked with, Steve Nano. I worked with him in Chile and Argentina back in the 90s and a bit in Australia as well, and now he runs Mirasol Resources. It's a solid company. He and his team are generating big target ideas in Chile and Argentina, such that if they're successful, if their concepts are successful, we're looking at multi-million ounce deposits that are going to interest a major. And so they've got Yamana in Chile and Oceana in Argentina exploring their projects. They've got, in addition to that, they've got about $25 million in the bank themselves, so there's no chance of additional dilution there. And the results I've seen to date are suggestive of a large gold system, particularly up in Chile. Massive alteration zones that have never been tested by modern drilling and such, and they're walking across these things and turning up good geologic evidence that there could be something of size at depth. So that's the sort of company that I think is worth, it's something I've held for a long time. I'll continue to hold. They made one discovery 5 or 6 years back, which they sold for $65 million. And I think, that's one you can hold for long term and do well on.
Yeah, certainly. And in Argentina, the political situation has improved some, I believe, such that companies are now starting to spend money exploring there again, right?
Certainly, Argentina politics has improved, but again, it comes you got to know where you're at. They're exploring in Santa Cruz province, which is just down south. That province is actively engaging mining companies. There's mining going on. There's other provinces in Argentina you shouldn't even get into because the province doesn't want mining. So it's not even countrywide, it's location-wise, province-wise, to understand the politics and whether you can mine there or not.
Yeah, and Marisol, just for our listeners' benefit, it's the symbol is MRZ in Canada. 49 million shares out, and this is a company that's been around for a while. So to your point, dilution is minimized there. Selling at $1.70 Canadian. So it's if they find something big, Brent, that's a pretty small market cap relative to what might be there if one of those projects hits. So yeah, the project generator model certainly is. I know Rick Rule has told me that's where he's been most successful in the mining sector, is sticking with those kinds of companies. Do you have another one you might want to share with our listeners?
Much smaller market cap, Evrim Resources, following the same business model. They've only got like 14 million market cap and about $1 million in the bank. They've been in existence now for I think 6 years or so, and they've spent a total of $6 million in their exploration efforts, and partners have spent $16 million exploring their projects. And again, that shows you the leverage you can get. And to date, they have not been successful in finding anything, but they've got joint ventures lined up with Antofagasta and First Majestic. There's a discovery on their ground adjacent to First Majestic silver mine that's pretty darn encouraging right now. Now, they end up with 2% NSR on this project, but First Majestic is under the gun to produce and permit a mine within two years now. Mm-hmm. Which is a very tight timeline. Yeah. So there's some bargaining advantage they've got there. So I think that's another company doing the right thing at the right time and bringing in projects that majors are going to start putting more money into. This is something Joe and I are seeing. We've talked about it. The majors, we're seeing a lot more of the majors begin either investing in or joint venturing with the juniors as they're starting to recognize that they don't have the pipeline to fill what they're mining, and really they don't have the agility, I guess you'd call it, to go into these areas and do the exploration quick and dirty, as opposed to for a company like BHP or Newmont Mining to go into a new area. They've got to bring in their health and safety people, the relations, all that sort of thing, which doubles or triples the cost for them to explore a project. Whereas you go in and joint venture with a junior, that's covered. So it makes much more sense for the majors to do that, and I think we're going to see a lot more of that.
Oh, yeah, it certainly does. Well, what is the symbol of this company again, Brent?
EVM in Canada.
And I'm seeing it's, you mentioned it's 27 cents, and let's see what its shares outstanding. 51 million shares. So, yeah, it's very low capitalization at this stage. And, well, those are a couple of great ideas, Brent. Thank you for sharing them with us. Anything else you might want to leave? Any other thoughts you might want to leave with our listeners today?
Certainly. Jumping back to the fatal flaws idea, Joe and I have put a report on our website that's available to anyone that wants to. Just go there and email us and you can get that. And actually, we did the past 2 weeks, we've looked at in detail at this the situation the majors are in, and then the most recent gold court deal with Exeter and Barrick. And we're going to be publishing our thoughts on that as well, which I think you'll find interesting. And once we put that out, I'll let you know, and you can send a link out to your listeners.
Oh, that's fabulous. Thank you for that, Brent. And again, folks, it's explorationinsights.com, explorationinsights.com. Just before I let you go, you mentioned that you've got Joe traveling someplace to look at something. Would you care to tell us where he is and what he might be looking at?
He's in Manitoba looking at a company called Calinex, who are pretty cheap. They've got plenty of cash. They're selling not much above their cash, and they've made a discovery, a zinc polymetallic discovery. Recent drilling seems to cut it off, and the share price dropped down. So he's up there getting a handle on if there's some size potential with this zinc discovery that they've made.
Oh, good. Well, maybe that's one you or Joe can talk to us about in the future if it looks good. But in any event, I know you'll be letting your subscribers know what you think of that and other projects. So it's explorationinsights.com to sign up for this excellent newsletter. Thanks again for being with us today, Brent, and we'll look to do it again sometime in the near future, hopefully.
Thank you, Jay.
Well, before closing today's show, I want to remind you that space is filling up fast for the Metals Investor Forum held at the Rosewood Hotel Georgia in downtown Vancouver on May 5th and 6th. As was the case in January, I expect the folks at the Metals Investor Forum may soon stop accepting new attendees given space constraints at the Rosewood Hotel. So if you plan to attend this conference, which I consider to be the best conference there is on junior mining exploration companies, go immediately to jtaylormedia.com or miningstocks.com to save yourself a seat. Click on the Metals Investor Forum banner and enter your name and email address to ensure a seat at the next Metals Investor Forum. Now, next week on this special Top Stock Picks podcast, Gwen Preston is scheduled to be my guest. Please tune in then, and every Tuesday for more fascinating investment ideas next week from Gwen Preston. I'll see you then.